Hi everybody, this is Martin Mesa. Welcome back to Mortgage Mind. Today's video is called How Rate Locks Work. Okay, so you're in the market to get a mortgage loan, either to buy a property or maybe to refinance an existing mortgage you have. So everybody knows that you want to get the best rate, the lowest interest rate for the loan you're getting. The lower the interest rate, the lower your monthly payment, the lower amount of interest you pay over the life of the loan. So once you get started with that process with your mortgage company, whether it's for a purchase or a refinance loan, at some point that loan officer you're dealing with is going to quote you the best interest rate they can offer you for your given situation, for the loan you want, right? Based on a number of factors. They're going to say, okay, this is what you're eligible for. That interest rate at that point usually is not what we call in the mortgage industry a locked rate. A locked rate means that the rate has been secured for you for that loan with that company so that it protects you in case rates go up. Once your rate is locked with your lender for the loan you're applying for, you are protected from increasing rates. So if the rates go up, because the rates go up and down every day, like the stock market, you are protected and you are secured. Your rate's not going to go up once it's locked. Okay, so that's why locking is important, because until that lender locks your rate, the quote they gave you for the interest rate on your loan is not guaranteed, so to speak. It is subject to change until they lock your rate. Okay, so the main thing you want to know is when you're talking to a lender and they quote you a rate and you like that quote and you want to proceed, you want to find out from that lender, what do they require from you in order for them to lock your rate, and how soon can they lock your rate? Because up until like I said, up until they lock your rate, that rate can go up. It's subject to change if the market fluctuates enough. So you want to protect yourself, get your rate locked in case rates go up. That way your rate doesn't go up. Okay, and after you lock your rate, sometimes some lenders can actually lower the rate even more if the market improves enough after the rate is actually locked and secured during the process of the loan. So find out from your lender what specifically they need from you. Sometimes it's information from you, sometimes it's documentation from you, sometimes it's some signatures from you. Usually it's a little bit of all three. Find out what they need from you, and soon as you get them all that, how soon can they lock your rate? Because like I said, up until it's locked, that rate may change, and it could come back to affect the rate you get and hurt you. So anyway, hope that helps. Take care. Hope all is well. Stay tuned for our next episode of Mortgage Mind. And if you like what we're doing, please like and share with your friends and family. Have a great day.